Welcome back. In just a couple of minutes, the pre-opening rates will kick in and plenty to talk about. Let's get Chandan Tuparia of Motilal Oswal Financial Services into the discussion. Chandan, looks like it's going to be a good opening for the market, but tell us about the stocks that you're watching this morning.
Yeah, good morning. We have seen the index making lower highs, lower lows from last couple of days. On last trading session, the volatility index jumped by around 10 to 15%, going to 16 marks. But overall, we believe that multiple supports are seen at lower levels. However, due to the higher volatility, some volatile swings cannot be ruled out in the market. On the last trading session, we dipped it towards 18,150, but then recovered. And today, as per the global market, we are slightly opening positive. So we have to be very stock specific. We have to trade the range, and we believe that 18,000 to 18,500 is going to be the broader trading range now. So one can play accordingly. For Bank Nifty, now it has to hold beyond 42,750, 43,000, then only the stability could be baked. So some sort of pause in the positive momentum was clearly visible in last couple of days, and we need to deal with the same. And what thing we have noticed that in last 2 days, when market is falling down and volatility is moving up, selective pharma stock started to move up. So either we will go with the defensive name or go with selective hedging activity. So in trading ideas, we have buy on Apollo Hospital. This stock has seen some profit booking in last couple of days, but on the last day, it has taken support from the important zone and turned higher. We have seen good build-up of long position led by put writing. Delivery volume also spiked. So recommending to buy on Apollo Hospital with a stop loss of 46.80. And here we are expecting a rally towards 4900 level. Second trading idea, I also select from the pharma pack, that is the buy on Cipla. This stock has also seen the good momentum led by open interest activity. Most of the pharma, hospital, and labs counter are doing well. So we are also recommending to buy on Cipla with a stop loss of 1100. And this stock can head towards 1160, 1170 on the upside. While on the negative side, we believe that selective real estate counter, whether you talk about the Godrej Realty or Oberoi Realty, are likely to see profit booking. Even counter like PVR can also see the decline. So we need to look at the key level of 18,150, 18,088 in the Nifty. And while we can play in selective pharma and the defensive counter in the market.
Okay. Chandan, very briefly, this Dr. Lal, Thyrocare, all these Metropolis saw large moves. Should we expect any follow-through? Have you looked at these charts?
Yeah, so we believe actually most of these stocks were in downtrend. They were making lower top, lower bottom. But now as the world are worried about the COVID, so these stocks are playing some defensive move. And huge shorts were being witnessed here. So that is why we are witnessing some short covering activity.
Okay, thank you very much, Chandan. For that, let's address another important issue. Now, yesterday, the minutes of the last monetary policy meeting have shown a deep division within the 6-member panel. RBI Governor and Deputy Governor remain cautious. They warned against a premature pause in policy action. External member Jayant Verma has said the current policy rate and stance can damage the growth outlook, while Ashima Goyal has called for a neutral stance. Lata spoke to all the 3 external members of the MPC, and here is her report on the minutes and the divide that we're seeing within the RBI MPC committee. Lata?
Well, that's a good wrap. The MPC minutes shows deep divisions within the committee, but my sense is hawkishness is outnumbering or surpassing the dovishness. First, Governor actually sounded a little hawkish. Battle against inflation not over. Premature loosening is bad. Patra says core CPI doesn't look like falling at all. And even with all our monetary policy action, inflation is between 5 and 6% in the next 12 months. Doesn't show on its own any momentum to go towards 4. Rajiv Ranjan, the other MPC member, also worrying that core CPI is high in spite of the crude fall. That's troubling, but he also points out that next year, the world and India is likely to be more preoccupied with growth. So you may say that's mixed. Bide, the external member, again sounds mixed. Growth and inflation is a mixed picture, he says. But you can't have poor outcomes on both. So it's better to achieve your outcome on inflation. So stay with the monetary policy, removal of accommodation. The real dove is Dr. Verma, who says that you are going overboard and you are likely to impact a fragile growth. I mean, he's almost warning the MPs that you're going for overkill. And he also says that your inflation forecast is not correct because it's based on $100 crude. That's an important telling point for him. Goyal agrees with him. She says that there are already signs of inflation moderating. As well, there is much less pressure on the rupee. So where is the need for further removal of accommodation? Accommodation already removed. Go to neutral, give growth a chance. So if you put it all together, the sense you get is Patra most hawkish, Governor Rajiv Ranjan and Bhide middling, and Verma and Goyal dovish. My assessment would be that if you read only the minutes, you would expect one more hike.
Okay, Lata, thanks a lot for that. That's on the RBI MPC minutes. But let's get back to tracking the market. The pre-opening rates are kicking in. And you know what? The Nifty is all set to open well in the green, about 100 points higher. But so are banks. Just look at the banks. Bank of Maharashtra, UCO, IOB, Central Bank, the whole lot up anywhere between about 3 to 6 odd %. And big volumes piling up on these names as well. Apart from that, a couple of stocks that I want to mention. REC, let's pull that up for you. Jefferies has added REC to its India portfolio. So perhaps there could be some traction there, 1.5% higher on that name. And then KPIT Technology as well. Goldman Sachs has a buy with a target price of 930. So it would be interesting to see how that one's moving, considering that, you know, IT has been under pressure for a while. This is quite an aggressive target price from Goldman Sachs. So KPIT Technology holding in the green. But global banks like Goldman Sachs and Credit Suisse are upbeat on the outlook for commodities as well in 2023. What's driving this optimism? We find out from Hugh Keener, the MD and CIO at Swiss Asia Capital. Hugh, thanks a lot for joining in. First up on crude, it's back above $82 a barrel. What's the outlook for 2023? Do you see it move higher? If yes, what could be the range for the year?
I think, you know, we've been now range trading for some time, somewhere between 80 and 150. And I think this trend range, plus minus a few dollars, will continue. It might stay a bit soft in the first quarter as the global economy weakens a little bit, particularly in the Western front. Whilst at the Eastern front, we see the opposite happening. We see China reopening the market, so demand is going to come back in. And so what we're looking for the mid-year to the second part of the year, certainly stronger commodity and crude prices overall.
What about gold? If the economic outlook is uncertain, do you expect a lot of investment coming through in gold? Will demand for gold skyrocket in 2023 and the prices?
I think if you look at this year, you start to see that the physical demand, particularly in Asia, has been tremendous and growing rapidly. And that has come from two reasons. The stability, the instability in financial assets, which is certainly undermined. The credit risk issue globally, which is increasing as interest rates still are climbing. Credit risks are still going up, and most banks are still in trouble because of upcoming credit risk. So then we look at governments, which particularly with the Russian front, we have a bipolar world, a world which is actually becoming multipolar from a singular world. So we're deglobalizing out of the US dollar dominant position into a more polar world. And that's in general quite positive for precious metal universe. We've seen as well the Bank of International Settlement, which has been withdrawing its feed of physical supply to the exchange in London, which means we have tight supplies. We've got up to 3 months delivery periods for larger quantities without spread. And that tells me the market is very tight and will continue to stay tight.
Okay, so apart from crude that we discussed, any other commodities where you see further upsides in the near term, whether it could be, you know, precious metals, gold? What's your view over there?
I think gold is staying in that environment where it's a beneficiary of the change of the global landscape, and so is silver. But then we like all the green metals, and main reason is this year we basically seen an announcement that the world signed to spend $150 trillion over the next 30 years on the greenification of the world, whatever this greenification means for people. But what it basically means is the demand for green metals continues to go up. The demand to work cleaner and more efficient is going up. And there we see a huge shortages. The underinvestment in all minerals, including gold and silver, for the last 15 years been so enormous that we have now supply sides contracting. And that means actually as soon as demand comes back in, because the Fed will move probably sometimes in the first quarter on a softer stand. I think most central banks will have a softer stand as inflation comes a little bit off, and particularly economic growth will soften. So that will be very positive on the end for the demand cycle again, and that the new cycle for commodities emerging quite strongly.
Okay, we'll leave it at that. Thank you very much for joining in. So one of the big drivers for commodity in 2023, according to Yug, is going to be the underinvestment in commodities. The supply side has been contracting for the last many years, now 10 to 15 years, on account of underinvestment in commodities. So his view is that as soon as demand starts skyrocketing, you will see a boom in or an increase, perhaps, in the pricing. So that's the commodity outlook for 2023. The big driver will be underinvestment. But let's get in our 9-10 calls as well. We have Sudarshan back with us. Sudarshan?
Well, the Nifty is a trade only intraday. Use some method like a moving average or channels to trade whatever you can. CanBank is a buy with a stop under 309.
Mitesh, what would your 9-10 call be?
I'll go with the buy on Power Finance Corporation with a stop at about 135 and a target of 145.
All right. Those are individual kind of trading ideas. Any thoughts, Mitesh, on these? I was meaning to ask you about the Path Lab companies with the big moves that we saw. Anything indicative of a breakout or anything? No.
I think a lot of healthcare, pharma, and other stocks, along with pathology stocks, broke out yesterday. In fact, I have focused more on the pharma names because I think that's where the breakouts look stronger. Typically, stocks like Ipca Labs, DVs, or Cipla, I think they look better than Path Lab stocks. Okay.
By the way, the pre-open is indicating a 80-90 point gap up. Mitesh, what would you do if you get that open?
As I said, I think Prashant, Nifty will be somewhere in between of 18,200 and 18,450. So in the middle of the range, I wouldn't be wanting to trade the index.
So you get to an extreme and then decide what to do, which is a few hours into the session.
That's right. Okay. I think once closer to the ranges on the upside, try shorting around 18,400, 420 levels.
All right, fair enough. The other space is public sector banks, Mitesh, which saw very large reversals yesterday after being up. Have you looked at stock structure, setups, and what would you want to do there?
See, I think a good part of these stocks now, after a good rally, have consolidated, come back to the support areas. I think BOB was something which was under my consideration for a buy call. I think 175, 174, very strong support levels. The stock could possibly go back to about 190. I'm not sure they'll make a new high because they're very overbought on the medium-term charts, but a bounce back from these levels is very likely.
Okay, well, a couple of more stocks to look at. Alkyl Amines, we were telling you about this in our top 10 segment. It's up almost about 3% as the Commerce Ministry has recommended the extension of the anti-dumping duty on monoisopropylamine. Okay, I got that right this time.
Very good, Sonia.
Not bad for first attempt. But Sonal's here. She's the expert. She has another stock on her list. This is part of our Momentumizer segment. Sonal, what are you looking at?
I'm looking at Phenolics Industries, Sonia, this time around. The stock was up 5% yesterday and has been an outperformer. And what volumes the stock is trading at? Yesterday on the NSE, volumes were close to 115 crore rupees. And in last couple of days, we've seen that this particular counter has gained a lot of momentum. So if we just look at the volumes, they have been continuously increasing in last 1 week from around 57 to 60 crore rupees. Then it went down to 10 crores. And yesterday, it was a big move as well on the stock. Up 19% this month itself. And yesterday also crossed the 20-day moving average of 170 rupees a share. Couple of triggers which are working well for all the plastic pipe companies. One is that PVC prices, they have been hiked, and the expectation is that they have bottomed out from here and they will continue to go up. Remember, in Q2, margins were heavily impacted because of lower PVC prices, but the view is now the worst is over. And there's also strong demand in the agri space. That's what experts are suggesting, and this company has the highest exposure to the agriculture sector.
Okay, thank you very much for that. I'm watching for Tata Communications because the company has gone ahead and acquired a company called Switch, which is present in North America as well as Europe, which will help the company expand its video content offerings. The company will be paying about a little more than 480 crore for the acquisition, and the acquired company has revenues of close to about 650 odd crores. The other one that I'm tracking very closely is KPIT Technology. Now, remember, Goldman Sachs has been very bullish on KPIT Technology for a while now. They met the management recently, and here are some of the key takeaways. They're saying that the recent order win of $100 million deal plus with Renault was actually won at premium pricing. So that's a positive. Secondly, they're saying that earlier we would win smaller deals, right? We're just providing one platform, one program. But now we are, winning projects which cover the entire, software SDV, software development vehicle, gamut of offerings as well as platforms. That's a positive. And another important thing is that going forward, they say that maybe each client can now contribute $100 million of annual revenues, something that the company has not seen, because if you look at the average revenue per client is sub $10 million. So if that starts expanding, the company gets greater wallet share, it will be a big positive.
Okay, that's on KPIT Technologies. We also have Bandhan Bank on our radar. Abhishek's here to tell us why he's watching that one. Abhishek, over to you.
Well, Sonia, they are looking to, sell about 8,900 crores to an ARC, for which they'll receive about 801 crores. So sources says that the bid has come from an ARC along with an investor. Bid likely to have come from a big lender and its, ARC arm. Board meet will happen next week to approve of the same. So sale of NPA is actually good for the bank, given the fact that it gets rid of bad loans in its portfolio. Back to you.
Okay, well, I think we have less than a minute to go before the market opens. Okay, just about 10 seconds. And we have Atul Suri right here with us in the studio. So we're going to get to him in just a bit. Market all set to open in the green this morning, up about 90 odd points. The Bank Nifty is up 270 points. So good start for the market, in line with what the SGX was suggesting. The Sensex is up 270 points as well. The big gainers this morning, Adani Ports, Adani Enterprises up about 1% ICICI Bank, Infosys, Apollo Hospitals, ONGC, Bharti Airtel are stocks that are up almost about 1% or so. And then you have a lot of the other banks, whether it's SBI, Kotak Mahindra Bank, all trending in the green. What's in the red then? Few and far between, just L&T, Axis Bank and NTPC, and that too absolutely flat. So it's actually a very good opening for the market, you'd have to say. Over 100 points higher on the Nifty now, back above the 18,300 mark. And let me also draw your attention to the market breadth, which is standing at almost 1,400 stocks on the advancing side versus about 500 on declining. So that's about a 3:1 in favor of advances right now. Plenty of stocks also sitting at fresh highs, so we'll get to that in the broader market in a bit. But for now, the opening for this market is looking very good. In fact, this month, it's been a strong run for many of these pharmaceutical names, and that continues, whether it's Apollo Hospitals. Divi's Laboratories is once again trending in the green, so keep an eye out on that. And now the Nifty is holding firm above 18,300. What are you watching in the broader markets?
Well, the mid-cap index is open with strength, up 0.7%. The advanced decline ratio is solid, close to about 1,800 stocks in the green. Mid-cap banks are on fire. IOB, UCO Bank, Bank of Maharashtra. So these are stocks where you are seeing gains of close to about 4 to 5%. So that pocket is active. FACT, a stock which has doubled in this month itself, continues to rally. So FACT has a gain of close to about 3%. Some stocks which are in the news, Alkyl Amines, Borosil, Kalpataru Power, gaining close to about 2 to 3 odd %. Bandhan Bank, which is, got that ARC, it's got a bid worth 800 crore rupees. So Bandhan Bank has gained 1.5%. Tata Communication post the acquisition of Switch is higher by 1%. On the losing side is Ajanta Pharma. That's down close to about 0.3%. Early in the morning, we had a block deal of 1.7% equity. Sources were indicating to CNBC-TV18 that the promoters could be selling some stake in the block deal window. Part of it has played out. Keep your eye on SpiceJet because I think in early trade it was a bit subdued in trade. You can see weakness in Ease My Trip. Perhaps the street is worried about if COVID spreads from China to the other nations. Is that going to curb the travel hospitality segment? So a couple of these pockets, even Interglobe Aviation today is down close to about 2 odd %. All in all, we're up in the green, up close to about 0.3%. But Prashant, some of those gains have tempered now.
Yeah.
We were up 90 points, I think, in open. Now we're up about 65, 70 points.
Oh, absolutely. So the open, as we've been saying, has large openings have not held. And at some point, the market gives you an extreme move on the other side. So we'll see if we see a repeat of that today as well. Let me just quickly look at where there are other gainers. So PSU banks, right? Once again, PNB, UCO, IOB, all between 2 and 5%. The PSU bank space saw a very violent move, 6% reversal intraday. The PSU bank index itself, but it's starting higher. It's pulled back. I mean, the high was last Tuesday. We put out that piece on PSU banks comparing historical valuations. The index itself has pulled back 10%. Stocks, of course, have done much more. So is this enough is a question. Now, what else? KPIT Tech is up about 2.25%, 720. Info Edge is starting with 1.5. I'm only mentioning things with volumes. GIC RE, we had the management with us yesterday. You know, the commentary was not great, was a little subdued. Stock was down 8% yesterday by close. It's up 3.5. GIC RE has come alive recently and it's doing well. What else? There is Kalpataru Power, which is up about 2%, 2.25% as well. Indigo is starting down 3%, so that is at 1963. You know, Indigo, of course, gets impacted. Airlines get impacted with the spike in oil. Adani Power is down 1.75%. Thyrocare, we just had the management with us, was up 15% yesterday. It's starting down about 2% at this point in time. Punjab and Sindh Bank is another one which had a wild ride over the last 1 month. It's down about 3%. Garden Reach Shipbuilders is another one, 3%. So starting lower by about 3.5%. But the momentum is with what is up, and market breadth is 3:1 in favor of advances at this point in time. 65 points is what we have. Atul Suri is our market master today. He's Chief Executive Officer at Marathon Trends PMS. He's with us here in our studios as well. Atul, it's always a pleasure. Great to have you with us here. Thanks very much.
Thanks.
What do you make of these? I mean, end of the year is supposed to be quieter, calmer, right? Supposed to sit back and...
Absolutely.
This is last 5 days. On an average intraday, we've seen 200-point moves.
Absolutely.
Actually,
it's been the whole year, man.
Yeah.
It's been the whole year. You know, like last year, if you look at it, so to say we are 5% up for the year, looks like a pretty flattish year, but it's been very violent.
Yeah.
In fact, if someone asks me what does this year mean for me, I think the trends haven't really held out. There have been so many switches. This time last year, it was tech, right? Remember all those IPOs were coming out? All the digital was the big one. Everything is off 50%. If you were to not look at something, it was PSU banks and banks. Because remember, banks were a dog a year after that. And it's the best performing sector. Then you had a move in commodities. Commodities corrected. So the year has been nothing but a case of very fast moving, short-term 3-month themes. And if you look at it, what is the genesis of this problem? Why has markets been so choppy? The reason is that actually globally, the macros itself have been. Whether it is your talk about inflation, whether it's about bond yields, whether it's your war also. So there have been a lot of chops in this market. So as I said...
Macro cycles have gotten shorter, market cycles have gotten...
Yeah, and there are many factors that play together. So that's what's really causing that kind of choppiness. I mean, what you're seeing today or in the last few days is something that's what's been the year as...
Yeah. Actually, market views are also, I mean, they're so extreme.
Yeah.
You know, there are people who expect markets, a bust or a boom.
Like China COVID, okay, yeah. Like, I mean, it's not something that came new to us yesterday that suddenly, you know, you have 3 cases.
I think that was just an excuse. I mean, there was nothing,
Absolutely.
You know, I put that piece out day before yesterday.
I mean, it was like ridiculous. What happened is, and you look at global markets, everything was positive.
Yeah,
I mean, those 3 cases in India have caused like
I think markets also make opinions, right? I mean, if you listen to the earlier guest, Dilip Bhatt, he was talking about PSU Bank. Now, PSU banks have started falling, so now the problems start coming up, right? I mean, there's no consistent growth, there's NPA problems. So
I have an original line, right? And it really is important for you in your profession, which says that prices move, reasons follow.
Yeah.
I know, we know that. We've been witness to this for the last 15 years.
You have to justify every price move,
but
unfortunately.
Atul, I am surprised to see you here, not in our studio, but in Mumbai at the end of the year. I thought you'd be in some Thailand or Goa.
3 more days. 24th.
Where are you off to?
So I'm going to an island called Boracay. It's in Philippines. Yeah, so it's a great place. I have friends in Philippines. So we are actually planning to head out to Boracay for
Thanks
that
for
place.
making all of us here feel really bad about our New Year plans.
No, what I like about the island is...
Here next week.
I think the quality of water is better than Maldives.
I hope to visit Boracay someday. Sure. But about the market, you know, 2023, the expectations are low. So that's always a good thing, right? Everyone's entering 2020 with muted expectations. Is that your view as well? Do you think that the Nifty may not perform? And what's the target that you're looking at?
So since we are end of the year, lighter moment, you know, like every year we are asked these next year targets. Even at Diwali we do it. But honestly, there is a template to it. Okay, let me tell you, there's a template to it. In India, every fund manager will come and tell you 12 to 15%. In the US, they'll all tell you 6 to 7%. And nothing really happens. We are the best performing market globally. We talk about 15% last year, we've done 5%. And US, everyone spoke of 6 to 7%. The US is down 20%. So at the end of the year, Sonia, these are all, like there are fixed templates. Nobody knows what we've been speaking about earlier, that the market has had such swings, such mega macro moves. Who the hell knew that these things are going to play out the way they did? So to some extent, we live 1 month, 1 week, 1 year at a time. And that's how we really have to play our innings. It's like cricket, you can't say that I'll get 36 runs in the last over. You just have to keep taking your ones and twos and hope somewhere in the slog the target is achievable. So our life is, people think that we know the end of the world, but we don't. Our ability is just to be able to adjust to changes. Our ability is just to be disciplined about it. And that is what it is. And that's why they say investing is more about 90% is about the emotion. And your emotion gets tested at those spaces. But honestly, to write a paper of what life is going to be 10 years from now, who knows?
So let's talk about,
Just to remind you, I only asked you for a 2023 target, not a thesis on life.
All right, so let's talk about the 1 week, 1 month, right? Because cycles are much shorter now. They're changing rapidly. Views are changing. Leadership has changed, as you pointed out. Last year was all about tech. Now it's about PSU banks, and who knows what it will be 1 month later. So tell us the near-term outlook now on the markets as well as the sectors that you like.
So I think what's interesting for me is, like, let's take equities, okay, as an asset class. So what's interesting for me is that the US, after a very good rally in the last 2 to 3 months, last week was pretty rough for the US. And for me, the thing that I look out in the next few months is that do some US indices start making new lows, 52-week lows. Now, let me put it that NASDAQ is just 5% from 52-week lows, right? The S&P 500 is only 10% from 52-week lows. The Dow has done much better. So for me, immediately in the equity context, and it will have its impact on India. Those markets are not going to make 52-week lows and we are going to make lifetime highs. It's not going to happen. We know that. At some stages, the global macro does play out. So I think the immediate concern for me in the next few months is how the US markets shape up. The issue is that, well, they are weak. However, if they make a higher bottom or put a higher bottom in place, I think then we can have a more reliable bottom. And that actually can be or fuel a bull market. But however, if US markets start making new lows, then sooner or later there is going to be a global issue. And linked to this is the issue of commodities. Linked to this is the question of inflation and bond yields. So all these things are very, very connected. And this year has really taught us macroeconomics 101, simply because all these things have had an overlap. I, for one, think that the US hopefully would make a higher bottom, or kind of hold out to these bottoms, and which would be a case of a longer term base building, which is, I think, very positive for global markets. The reason is that I think commodities per se, I look at commodity charts very, very closely. I do think that commodities will even drift lower from where they are. We may have a short-term spike due to China restart in the next few days or weeks, but I do think that commodities are headed much lower. And I think that would be very, very important in actually taming your whole inflation argument. Because once your inflation argument gets tamed, then the pressure on bond yields, the Fed, etc., come into play. Our biggest problem has been that the year has been, because of higher bond yields, all your growth stocks, and India is a big quasi-representation of growth. We are a growth market. All of them have actually got battered. So I think that the year that as it plays out in various asset classes, there will be games to play. But coming back to your question, is that will the US make lower lows or will it make higher bottoms? If it makes higher bottoms, I think that would make me very, very optimistic of global markets.
Azul, which are the sectors where you're confident, somewhat confident that one should be in?
Yeah, again, sectors, very often we do have recency bias. Like everyone will say banking right now because they've done well last year. No one would say, everyone would say IT. So there's a recency bias to banking.
Can't say, as a technician, you can't say IT. You got to go with what is doing well. So
we are trend investors.
Absolutely.
But the fact is that IT may be the. I'm not predicting, but that's what happens actually year on year, very often. Yeah. But apart from all that, the thing that I feel that's very interesting for me is capital goods and infra. I think that this whole sector is a sector that has been ignored since 2008. It's 10, 12 years that actually most of these stocks have not done well. A lot of them in the mid-cap space have started breaking out. The quality of numbers coming out are very good. And I think that this is again a sector which, what I saw in 2003-04, heading up to 2008, when these sectors or these themes play out, they can be multi-year themes. And as an investor, I'm looking for those spaces. So we are overweight cap goods, we are overweight infra.
What kind of names? Just
I think a lot of them electrical limited, electricals related. And there is also a bit of a PSU play that comes into things. These are, not the popular names. They're very unloved kind of plays, ignored kind of plays. But in the mid-cap space...
Not as an advice.
Not an advice. Like I have a stock called Apar Industries for that. So these would be very, very niche plays. But I think that there are a lot of such interesting plays that are there. I think electric mobility, that is another very, very important theme that are playing out. So I feel that infra and cap goods could be a surprise sector. Of course, you've got your bits of, PS banks and things like that, which is a larger theme at play. But I, for one, if I had to pick out one sector, I feel that capital goods and infra could be a very interesting theme going ahead.
Okay, in fact, that's a common view now. I mean, the last couple of days, many experts have, indicated that this is a space to be in, perhaps. What about autos? I think, apart from maybe M&M and, say, something like a Hero, which did about 12-15% this year. Rest of the auto pack is disappointed this year.
They gave back. They gave back most of their gains. That's exactly the point, that the trends have been so quick that if you really didn't book out, they've all come back to where...
Lost. But you said electric mobility. In that, M&M is up 50%, but do you see more there? And how do you really play this theme?
I do think so. And interestingly, more than just the end automakers, you should look at the ancillaries or the inputs that are going into play. So in the whole auto ancillary space, I think there are some very interesting stories, which are, suppliers for the electric place, or, even in the tech space, there are some stocks which are doing a lot in this autonomous driving and things like that. So I feel that that is a theme that is playing out very well. That's a place that has a lot of traction globally. And one will have to look at, again, it's not like going to be a top up and, you've got a big sector theme. This is going to require a lot more research. But I feel that this is where you could get above average or, index beating kind of returns. So that's what we are overweight, or these are the themes that we're looking at.
By the way, on cue, the market has already given up all those gains, as we were talking about, right?
Yeah.
We had 70 points, I think, at the day's high, and we're down about 5 or 6 points. So this is... basically what we've been seeing on days. Don't chase the moves, at least at open, is what we've been saying. So the high was 18,318. We're at just under 18,200. Yesterday's low was 18,162, which is a little lower than the previous day's low. So, you don't want lower lows. But for now, the market is looking a little weakish. Atul, thank you so much for dropping by. Have a great vacation. And enjoy yourself. And
be careful, there's COVID everywhere, so don't get stuck in Boracay.
It's not a bad place to be stuck in, I'm assuming.
Yeah, I think so. And thanks to online, everything is possible, so living your dream.
By the way, there was a news flash that the Prime Minister is going to chair a high-level meeting on COVID management. I just saw that. So, we of course had that on alert, right? So. Yeah. I think absolutely good to have awareness spread. And I think, as Gagandeep Kang also earlier told us, that you need to sort of test for the variants which are coming out, mutations, newer variants, etc. So that's always a good thing, to be on alert, to be vigilant. Markets absolutely flat, 14-15 points now. Sonia.
All right, so let's get in our first corporate on the show now. Page Industries is on our radar. Remember, the company in Q2 had a volume decline of 9% sequentially as well. Volumes were down 1%. Kotak believes that this weakness could continue in the second half of the year as well on account of inflationary pressures. To discuss the demand and the outlook, and plus, cotton prices have seen a 20 to 25% correction from the top. We're now joined by V.S. Ganesh, the Managing Director at Page Industries. Mr. Ganesh, morning. This is Rima here. First, tell us, how is demand currently for you? How have the last 2 months shaped up, and what's the outlook for the next few months?
Very good morning to you, and pleasure to be here on this platform. Yeah, demand first half was excellent. You might have seen the numbers. It was excellent for us. And the consumer retail space is going through a challenging time, especially in Q3. So we are no exemption to it. We are also going through it, but I feel we will bounce back in Q4. We are taking all the measures which are required for us to get back. There has been quite a lot of inventory in the marketplace, and we are taking a lot of action to correct it. So like any other retail consumer brand, we are going through that small tough period, I can say. But we are in the essential space, as you know. So this is going to be a short-term thing. As the inventory in the distribution gets corrected, I think we will pick up. We are all poised to have a great Q4, and we are taking all the actions that are required to bounce back.
Okay, so can you tell us what would the volume growth be like? What are you expecting in the second half of the year? Because in Q2, your volumes went down by about 9% quarter on quarter, and it was barely a 1% growth year on year. Do you hope to see single-digit volume growth in the second half of the year as well, or could it be better than that?
It could be better than that. Let me also give you a perspective as far as Q2 volume growth is concerned. It may look muted. That's because if I exclude the mask, which was very much there during the last Q2 of last year because of the pandemic, and that was something which is to do with the pandemic. And if I remove the mask category, we actually grew 7.7% on volume, which of course is not where Page usually is. You know, we always have a very robust volume growth. I think we will do very well in Q4. I do expect that we should be in the same good trajectory as we used to be before.
Okay. And we certainly hope so. Sorry, you said 7.7%. In what period, Mr. Ganesh? Ex masks?
I was talking about Q2 volume growth compared to last year.
Got it. And
if we remove the mask,
got it. Naturally.
Then we have moved up 7.7%.
Naturally, and maybe masks are coming back. I don't know. I mean, with these cases.
It looks like to be frank, Prashant, we don't want them to come back. But
Absolutely.
Fingers crossed.
Now, Mr. Ganesh, you said you're expecting a very strong fourth quarter, right? What is that on the back of? I mean, because that is just now, right? Jan to March. And second, cotton prices have come off some 20-25%. What kind of gross margin improvement can we see?
Okay, so to answer your first question on the fourth quarter, there are a couple of things. One is the enablers which we are putting in the market. The pandemic meant that the inventory health in the supply chain was not all healthy. There was so much volatility, demand shift at a category level, and there is a mismatch as far as inventory is concerned. We are taking all the actions to correct it. And therefore, I feel the traction will improve in Q4. That is one. And the second is last Q4 was not generally all that good because there was this fear of GST coming in. And people wanted to hold, and the distributors were not buying much. So if I look at the last Q4, our performance, and now I feel everything will be normal, I think we will be able to record very good growth.
Margins,
and coming to the cotton, yes, we are keeping a close eye on this. Cotton was 104,000 rupees per candy sometime last year. It has come down to 65,000. I personally believe it will be in that space for some more time to come. And mills are under tremendous pressure. They are all making losses, so especially the spinners. So I feel the prices may go up a bit if there is a higher demand. It all depends on how US pans out, and if there is much more improvement in exports, then there can be a slight increase. But I don't see cotton price increasing to the old 104,000 levels. It may have a slight increase. I am also keeping a close watch on this because the area covered for cotton is higher this time. The acreage and the monsoon was very good, so the crop is supposed to be very good. So I have a feeling that we may be holding at that 64,000 range.
Okay. If it does hold there for your gross margins, what does it mean?
Well, we did consider this when we did the budgeting. So when we did the last price intervention, we didn't want to outprice ourselves. So we decided to touch the price considering a lowering of the cotton price. So we already considered this when we had our last price intervention. So it may mean that, even if the cotton prices move up a bit or something, we may not have to quickly intervene and touch the MRPs. We can hold where we are today.
Okay. So you don't see an increase in the prices even if cotton prices move up from current levels.
In the immediate future.
In the immediate future. Okay. But gross margins in Q2 were 56%. Will the gross margins be higher in Q3 and Q4? And just one more point. You said in Q3 you will be impacted or you're not immune to the tough consumer retail spending outlook currently. How bad is Q3? How much lower are the volumes compared to same time last year as we speak now, sir?
So Q3 is still not over, so I don't want to give you specific numbers. But
sir, in the first 2 months of October, November?
It has been softer than before because of the pressure which we all facing. But this is also compounded by the fact that we are also implementing auto replenishment system to the distributors to improve the hygiene of the inventory. We want to make sure this, in the long run, this is the healthiest thing for us to do. So we are actually taking those actions. So we are looking at the long-term interest of the business rather than a quarter to quarter. And we are holding fort as far as implementation of that is concerned. So it's just a temporary pain which we need to go through to have a good health in the long run.
All right. So if you're sitting on a run rate of around 1,300 crores per quarter now, at least 1,300 crores is what you did in Q2, which means about 2,500 crores for the first half of the year. For the second half of the year, considering that there are inflationary pressures, there's competitive pressures as well, what kind of revenues would you eke out compared to the 2,500 which you've done in the first half? And do you stick by your target? I think you had earlier said that in the next 4 to 5 years, you're looking to do about 10,000 crores of revenues. Is that something that you would hold on to?
We definitely will hold on to. In fact, internally, we are trying to see how we can accelerate that.
Okay.
Because we have a long way to go. It's a very underpenetrated category. There is much more consumer awareness. And the economy is growing so well that, we need to expand very rapidly. We are taking all actions to expand our capacities, be it in supply chain. The retail expansion is on track. I think we will be adding around 15 to 17,000 outlets this year in the MBO space. And EBOs, I think we will be ending at around 1,300 EBOs.
Okay.
And you will see much more buzz on the EBO space as we move forward, because the rapid pace in which urbanization is happening and the growth of the economy, we feel we need to move faster, and we are taking actions to increase this run rate as we move forward.
All right. So just a quick follow-up. So you said 10,000 crore revenue target over the next 4 to 5 years is what you're holding on to. You also said that you're looking to expand your capacity. What is the capacity at currently? And over the next couple of years, how much capex would you put on board? What would be the funds that you're putting on board as well?
Okay, our current capacity is around 265 million pieces, garments which we are producing and also outsourcing. We are increasing this, and we have a robust plan based on the 5-year plan which we have. And our capex is generally around 210 crores or 250 crores a year. That trajectory will continue, and there will be a balance between capex infusion for expansion and outsourcing. We also outsource around 1/3 of our products with our chosen vendor partners. And they will also be expanding along with us. So with that, we will be able to meet the long-term demand.
All right. Mr. Ganesh, great to have you with us here. Thank you so much for taking out the time and being with us on CNBC TV18. And I hope, we're able to do this on a regular basis. It's great to have you.
Prashant, a pleasure talking to you. And let me wish you a Merry Christmas, Happy New Year.
Same to you from all of us here. Thank you so much for joining us.
Thank you.
Okay, we'll take a quick break here. We've got the market, which is down 11 points. So all of the gains are gone and some more, some 80 points off the high point of the day is what we have. We are back and we have a discussion on banking lined up next, financials basically. Saurabh Kumar of JP Morgan will be with us. We'll throw questions on public sector banks, what happens to these names from here. And of course, we'll talk about private banks as well. Later, we'll connect with Anjan Chatterjee of Specialty Restaurants to discuss their fundraising plans post their board meet, which took place yesterday. Stay with us.